Business Bites with Kay Chauhan.
Wandsworth Radio. Welcome back to Business Bites. You're listening to Kay Chauhan. Since the financial crash of 2008, high street banks have become notoriously stringent about lending to small businesses. And to be perfectly honest, lending to anyone really. Go to any business networking event and it won't be long before you hear the 6-year-old mantra that high street banks do not want to part with their loans unless you have a pretty good track record over 3 years or you are willing to put down your personal assets as collateral. However, Market Invoice is one of a growing number of non-banks or alternative financial institutions that are bucking the trend and have created an online solution for SMEs looking to access funding. The fintech or finance technology it is using is also chipping away at the £80 billion stranglehold or 85% of the market that traditional banks have on invoice trading, where a business trades invoices with long payment terms, typically with corporate clients or well-known brands, in return for liquidity that would enable the business to continue to trade. Here's Oliver Cummings, Partnership Manager at Market Invoice, who explains how the fintech sector is helping SMEs access flexible and cheaper funding to run and grow their businesses, in the same way that iTunes and Spotify took the music industry by storm. Welcome, Oliver. Thanks for joining us at Business Bites.
That's okay. Thank you very much for having me.
Well, you work for an organisation that helps businesses, small to medium-sized businesses, access finance from their invoices. So how does that all work, and how common is this sector in terms of businesses turning to it for finance?
So traditionally about 5% of the UK companies do deal with invoice finance. We believe our product can really expand to a lot more companies with the kind of flexibility of the product. So traditionally in the invoice finance space, so you do a product for you do a service for your supplier, and they then send you an invoice. You then send them an invoice, and then they will pay you between 30 and 60 days later. So what invoice finance does is it advances that payment. Instead of being 36 days later, you get about 80 to 85% split on day one, and then you can use that cash flow in your business to keep your business running and to win new business and to hire more staff and to have a better working capital.
And it's quite a large industry from what I understand from your website. It says that the industry advances about £80 billion a year to businesses in this way.
Yeah, because at any one time there's about 67 billion actually owed to UK companies by larger corporates. There's actually a very large amount of late payments on this market, and there a lot of corporates at the moment are actually squeezing their smaller suppliers by offering 90 to even to 120 days slow payment term. So really the companies, the young companies, particularly companies in the Wandsworth area, they are really waiting for anywhere from 45 to 90 days for their main customers to bring them money back into the business. And that can be a real strain on the day-to-day lives of small business owners.
So it seems like it's quite an established market. So how did Market Invoice actually get involved in this sector? I mean, how does it differentiate from everyone else?
So what we've done is, I'd say a good example would be just traditional invoice finance company is similar to a mobile phone contract company, say O2, providing a service where you sign up to a contract, you pay a certain amount a month, and then as and when you advance your invoices, you have a fee, and you are kind of generally in a contractual relationship for a certain amount of time. What we've done is we've come into the market with a selective service, kind of similar to a pay-as-you-go mobile phone contract, where you can put one of the invoice onto our platform, and then you can advance that immediately with us. You don't have to advance any other invoices for however long you want, or you can do one every week. So it really is a completely flexible service for you to choose as and when you want to advance invoices. So that's kind of one of the key features we've brought to the market. Also, as a technology company, we can take away a lot of the barriers that have happened within the traditional, say, the key bank advancing invoices. There can be offline conversations for upwards of 6 weeks. Now, with us bringing in the kind of internet age, you can go onto our platform, you can put your company details on, and then we can actually advance money to you within 24 hours. So we've really kind of speeded up the process, and we've taken it online, and we kind of brought it to speed up to the kind of, a modern internet age.
Would you say it's like the equivalent of the payday loans? You've digitised the service and people can access finance quickly.
So you can access finance very quickly in our service due to the kind of efficiencies of our service. But we are looking very deeply into the companies and into the risk profile of the company. So we have an in-house risk model, and we look very closely at who the debtor is and the invoice and your company, and we lend based on that. So we actually have a very small default rate because we look very carefully at the companies. We work with the companies. So at the moment we've lent over £500 million worth of invoices to 1,300 SMEs so far. And also that we have very small default rates.
And so is it made quite clear, is it all up front about how much fees a business would have to pay to the organisation? As you were saying, it's all inputted online.
Exactly. So traditionally in invoice finance there's been many different fees and lots of audits and contract fees and big lock-in things where you have to work with that provider for at least 2 years. With us, there's no long-term contract. It's all very flexible. You have 2 fees. They happen at the point when we advance an invoice to you, and then at the point when the debtor pays, and the debtor pays the money back. So there's kind of only 2 fees that happen, and that's as far as you're going to go. You won't get any kind of shop fees from us or anything like that. You can go onto our website and you can log in your revenue and the size invoice you want to trade. You can actually see exactly how much you would pay for that invoice, and you can also see that we have a dynamic pricing model. So the more you trade invoices with us, the cheaper our fees will go, and you can see that from day one to how many invoices you would need to trade for our prices to reduce. And the reason why they reduce is because we get to understand your business more. We get to work with you, and then we can understand the risk of your business. And then as we get to know you and there's more data, the risk of your business will decrease, and therefore we can charge lower fees.
But if, for example, a business wanted to get access to finance for a specific project, they need to recruit or they need to buy materials, and they decide it's just a one-off, they wouldn't be any under kind of pressure to continue the service with you. Is that what makes it particularly different?
Yes, exactly. So say if they just wanted to use us for a one-off invoice, they just had a particular large bill, they were doing a big recruitment of new staff or maybe a marketing campaign, and they just needed a big injection of cash. Traditionally, they may have gone to the bank because that's the first thing they thought about. But with us, they can now get that same flexible kind of increasing in their working capital situation and cash into their business immediately using our service. And then, we wouldn't pressurize them into trading invoices the next day or the next month. It's really up to them as and when their business requires more cash into day-to-day running of the business.
But do they have to decide up front how long they will trade in their invoices? Can they decide as they go along?
No, it's very much decide as and when. We will assign a portfolio manager to your business, and they'll talk to you, ring you up maybe once a month, maybe once every few months, depending on what you decide with them. And it's really just, we wait for when you need to trade invoices or you would like to trade invoices, and we're not going to pressurize you to trade any more than you want to. And there's going to be no fees involved when you are not trading invoices. So it really is, the only cost comes as you trade an invoice. Since
Market Invoice has been established, what kind of impact has it made on the industry, this business model? So there's been quite a large impact on the industry. If you think about what HMV has had happen to them, where you would traditionally go to a CD shop, you'd buy a CD and you'd go home and you'd listen to the music. Now, obviously, you go to iTunes, you go to Spotify, and you stream music and you get immediately be able to listen to that music. And that's the kind of the power of what's happening with the internet and how
technology enabling much quicker and more flexible services. So the banking industry has never really had this happen to them. And there's a whole load of companies, we are one of the leading companies within the sector, creating this alternative finance space. And we're bringing the same technological evolution that happened to the music industry with Spotify and iTunes to the banking industry. So we've taken it all online. We found sources of capital from other places than banks' own money. And we've managed to bring that together to offer this extremely flexible service that can really fund and help small UK businesses, on a day-to-day basis.
You're kind of like a disruptor in the market. Have you had bigger firms wanting to do what you're offering at better rates?
We do compete with the banks, but we really are just hoping to do the product better and quicker than they do, because they've been offering this service for many years without any competition. So hopefully as we come in and we compete and our product is better and becomes cheaper, they will respond, and the whole SME finance market will become a much easier and more user-friendly experience, because really, what we're trying to do is drive the economic growth from the UK businesses.
In terms of the banking sector, obviously we all know what kind of trouble it has got the economy in, despite being regulated by the Financial Conduct Authority. Would this kind of financing also have some kind of oversight?
Yes. So what's interesting is from the credit crunch in 2008, a lot of banks just really stopped lending, and they really reduced the amount of money they would give to UK businesses. The money was still there. There were still many people wanting to give money into the businesses, and lots of, so what happened in that time is it came about the peer-to-peer market, and that's how we finance companies. We actually have a whole pool of investors, so we don't use it. There's no bank money. It's actually lots of kind of high net worth individuals or pension funds, or also we have the British Business Bank. They've invested into our platform. And so we're actually pooling different sources of money and using that money to finance growing small UK businesses rather using the banking money. And that's been a very big change since the credit crunch. And, it's arguably going to be helping businesses because the money is now available from many different sources. And lots of businesses would have immediately gone to their bank, and that's their kind of main place they'll think there is funding available. But really what we're trying to do is educate the market to show that there is many different sources of funding available to businesses. You just need to look, go online, search what's available, and you'll find there's companies such as Market Invoice that are very happy to fund you as you grow your business, or fund you to help your working capital needs that aren't a bank. And there are now many more options out there than there were pre the credit crunch.
What I wanted to really drill down on was, in terms of oversight, is there going to be some kind of regulatory body, or is this in the offing at all?
So we have the Peer-to-Peer Funding Association that we created within the industry, and they are regulating us. Also, at Market Invoice, we are in talks with the FCA, and they are looking at our business at the moment, because we're hoping to bring on money from the general public. Because at the moment we are funding businesses from the general public, but we are using sophisticated investors as a pool of money to fund them. In the future, we're hoping to have the everyday people actually using their own money to fund businesses, which we think will be very powerful.
Well, is that like crowdfunding?
Yes, it will be a source of crowdfunding. So it will be the peer-to-peer model, and the crowdfunding, it's very much of the same kind, and we'll be using many people's money and using that money to offer funding for small businesses.
If money is circulating the economy in this way, obviously, I don't know if it's obvious, but does that cause a bit of ructions within the traditional financial sector, or is it just a process of evolution? Banks and traditional lenders are just having to get used to that people can bypass them and still grow their businesses regardless of how banks give loans.
Yes, I mean, it's very much the banks have had such a dominant footprint and dominant market share for so many years in the UK that they've very much set in their ways, and they haven't really innovated as quickly as many would if they were in less competitive advantage. So what it really is it's the banking market evolving, and many companies such as Market Invoice, we are now around and we are challenging the banks, and we're actually winning business off the banks on a day-to-day basis, because we have a faster, more flexible solution. And we really can bring money from a business coming onto our platform, onto our website, and then within 24 hours we can be advancing invoices straight to their bank account. So they can come to us and they have a whole new source of funding within 24 hours. And that's just not something the banks have ever really needed to do, because they've got such legacy systems in place, and there's lots of offline meetings. We can bring the same an increased level of service in a much shorter space of time.
It seems that as long as businesses like yours exist, corporates or well-known brands will maintain their terms in paying invoices. It's a bit of a catch-22.
It is, and we are fully supportive of businesses paying much quicker, because our average loan life, our average funding kind of time we advance money for is 45 days, and that's actually much better than many people pay anyway. So really, we were happy to deliver our service for a 30 to 45 day period of time, but at the moment we're finding that small businesses are coming across companies paying them in 60 or 90 days. So
Sure.
Market Invoice will still exist and happily provide funding for the 30 to 45 days that a typical company would be waiting. But we're just finding, due to the market circumstances at the moment, a lot of larger companies are paying even later. So we are helping in that process, but we're all very keen for the companies to start paying quicker.
Okay, so what's next for Market Invoice? What's new and up and coming?
Sure. So we've just hit the big milestone of £500 million worth of funding to the UK smaller businesses. We've helped now 1,300 businesses. We've just raised some more money from venture capital, and we are now looking to grow our business. We're looking to speak to more companies, and we're looking to fund more companies. And really, we are concentrating on UK and Ireland, smaller business space. We're happy to help any business with over £100,000 worth of revenue. And really, if anyone's in a situation where they've got invoices, their suppliers aren't paying them quick enough, then we're more than happy to help. So really, we're just trying to grow the business and help more companies over the next year.
That was Oliver Cummings, Partnership Manager at Market Invoice. And if you're a growing business that is in need of liquidity and your local high street bank has been less than helpful, then find out if alternative financing can help you at www.marketinvoice.com, or you can call Oliver on 0203 761 0502. Next up is Hermione Taylor, CEO and founder of behaviour change social enterprise Do Nation.
Business Bites with Kate Johan.